Good morning, everyone. Thanks for tuning in. Arjun in Guangzhou, China. Thanks for staying up late for us, changing out of your pajamas.
That's right. Yeah, I'm ready to rock and roll, Dee.
And Kate, Crypto King, as they call you. You are where I am on the West Coast, so it's bright and early for us. And I'm so glad we're doing this. We've been doing these live streams at 7 a.m. Pacific, 10 a.m. Eastern, more frequently, and we just had to do one today, right? Because all three of us have been, I don't know, what's the word, anxiously maybe, looking at our screens this morning, looking at this incredible sell-off. Kate, tell me what happened this morning when you woke up and you saw that Bitcoin was crashing.
Well, like Arjun, also recently out of my pajamas, but on the other side of the world. So last night this started, before I went to bed, it was crashing under $40,000, which we hadn't seen, I think, since April. I mean, it's been really steady around the 55,000 level for a while. And that's something covering Bitcoin for the last 3 or 4 years now. You don't see that often. It's really known for its volatility. So this was expected. We've seen this huge bull run this year. So 40,000 was really the level that stood out to me, that, once it started getting below 40,000, you often see these sort of knock-on effects. And it's often caused by one or two headlines. We had headlines out of China, which I think Arjun probably knows a lot more about and can explain sort of the impact there. Yeah. But it seems like that wasn't necessarily new. That's sort of a stance that China has taken before. But that was one of the effects. You also had sort of the Elon Musk, Dave Portnoy was tweeting about sort of Elon's influence over Bitcoin, another thing that we sort of knew, and doesn't really change anything fundamental, but you see it sort of exacerbate. So I was talking to some folks this morning that said that this was a lot of margin calls this morning, sort of a huge liquidation event. And this often happens. You see exchanges have outages this morning. People get spooked, have to meet margin calls, have to sell. And then you see this snowball effect. And that's why we are seeing this accelerate so quickly. And it's not just retail buyers saying, oh man, Elon Musk is, influencing the price. Mm-hmm. It is sort of more institutional money needing to meet certain requirements and calls. And I think that's why you're seeing it sell off so sharply. Although you talk about whiplash, I tweeted out that Bitcoin was at 30,000, checked my phone 2 minutes later, be like, it's back at 37,000. So this thing moves.
I know, it's so like abruptly. We got to put it in context, right? You get 40,000 and then you touch 30,000 and you have the bull saying, okay, but look how much it's up over the last year. And that is true. But this is still sort of the biggest drop that we have seen in the most volatility, to put it in the context of a very already volatile asset. And that's why we jumped on here so quickly this morning. Arjun, I do want to talk about the China piece of this, because Kate alluded to this. She said this is nothing new, and I got to agree with her. I think that the more the Chinese government says they don't like Bitcoin, the more the retail investors like Bitcoin, right? Because if this is seen as a currency that stays anonymous and the Chinese Communist Party wants to keep control, that's not a case against Bitcoin. That's actually a case for Bitcoin, you could argue, right?
Yeah, you're absolutely right. I don't think the China piece played a big deal into it, exactly the sell-off we've seen today, because we've known, as Kate had mentioned, since about 2017, China's been cracking down hard on Bitcoin in 2017. They closed a load of local exchanges here. They banned initial coin offerings taking place, and they've just maintained this hardline stance ever since they're on Bitcoin. So what we heard today from Chinese authorities was really about reiterating the point that if you're a financial institution, you should have no part of any cryptocurrency business, whether that's on the trading side, or whether that's saying, hey, we can help people convert fiat into crypto, any of that. They shouldn't have any part of that. So this is just a continuation of that. And one of the interesting things about China is back in, say, 2016, 2017, Chinese traders would have accounted for somewhere like 80, 90% of the market. They could move the market. China moved the market back then. Nowadays, it's a tiny, tiny part. So any selling wasn't really coming from China. As Kate was saying, it was coming from the institutions and some of these other retail investors as well.
That's a really good point. I was just about to ask you that, because we've heard the stories, or at least I've heard the stories of the retail investors in China driving the price. But as you say, a lot more institutions have become interested in the cryptocurrency. And Kate, you were saying that this is where a lot of the selling is coming from, perhaps in this latest round. What does it mean sort of going forward? Are institutions looking at this, looking at the volatility, some that were maybe on the fence, thinking, okay, we saw what Tesla has done. We see that big companies like PayPal and Square are getting more involved. Do you think that this bout of volatility makes them step back, some that were on the fence, and say, we don't want to touch this thing, whether that's Bitcoin or Ether?
Yeah, I think it adds to this. I mean, we saw this kind of start and this conversation spark with the ESG tweet that Elon Musk put out, and basically saying what has been true for years, the idea that, there is an environmental impact to Bitcoin. You can argue how big it is and how it compares to the banks. And I think there's a lot of ways to slice that argument. That was sort of the first leg of this. And I think institutions, whether it's, if you're a pension fund or an endowment and you're also required to meet certain ESG levels, you might think twice about a tweet like that saying, okay, we knew this was an issue, but now it's being really put in the limelight. So that's one reason I think institutions on that side maybe we're holding back and saying, oh, it might be a good way to diversify, but I've got to wait and see how this plays out. The other leg of it is it is this volatile. We've seen this in Arjun, like in 2017 and 2018, you saw swings like this every day. So the idea that this is in some way a safe haven asset and that you would put Bitcoin on your balance sheet in the same way you would with cash, obviously it's seen huge upside, but I think this type of volatility really brings it home to say, okay, you may put 2% of your cash into Bitcoin, but be ready for it to change by 30% in a morning. Yeah. So I think those who don't have the stomach for it, I think you really have to be an outlier. You have to be a Jack Dorsey who sees this century-long output here. But it seems like, some of these institutions, I'm sure, are stepping back. There was a great JP Morgan note out this morning about institutions actually rotating back into gold, which the huge argument has been that, institutions they're over it. They're looking at this as a form of gold or digital gold and a safe haven asset, essentially. And there is data now showing that they are actually reversing and going back to gold.
That's an amazing chart, right? Because you kind of see that correlation. We'll see if we can show that in TechCheck in half an hour or so. But it's a really good point, guys, because if you thought if you're an institution thinking that you were buying Bitcoin as sort of a reserve of value, I mean, come on, right? It's an experiment still at this very, very early stage. And that doesn't mean that it's a bad bet. It just means, as you say, Kate, that you need to have the stomach for it. Yeah. So anyways, I thought it was really, go ahead, Arjun.
I was just going to say, I mean, Kate's right. You need to take the swings. I mean, someone was speaking to someone involved in a cryptocurrency exchange this morning was telling me, look, you got to put this in context that in that 2017 bull run, we did regularly see 30 to 40% corrections off all-time highs. And obviously, we had that not long ago, that sort of $64,000 plus dollar all-time high, and we've corrected, I think, plus 40% since then. So the bulls, of course, will argue, well, we've seen this regularly in bull runs. This is just another hiccup in what is going to be eventually another all-time high. Question is, when do we hit that? Or is this crypto winter 2.0? That's what we've got to see how this shakes out here.
Right. And Kate, I thought it was so funny yesterday on our show, you were quoting some of the Reddit crowd, calling it a boomer coin.
Boomer coin. It's so funny, but I think there is I think it does sort of signal a bigger shift going on, right? Like we were talking about sort of those meme coins. I know I mentioned Dave Portnoy earlier, but tweeting out about SafeCoin and people looking, we've talked a ton about Dogecoin, people looking for sort of the next momentum trade. Bitcoin was sort of seen as this safer, cryptocurrency for
more
your
mature. It's funny because it does, some of the narrative that's come up over the last week certainly is that why do we know that Bitcoin is it? Because it has branding power? Yes. And another way that someone else put it to me is it's going to look like your grandpa's crypto a few years from now. And when you look at, I don't think anyone is, doubting the technology behind it, but what we're talking about is its place in markets as an asset class, right? So why do we know that that's going to be, I know why it's going to be Bitcoin over Dogecoin, right? Certainly there's a very big case to be made there, but the point is that these coins are moving so quickly, and there's the case to make that you can actually use Dogecoin. People might want to use it because it's not as highly valued. Could this, Kate, let people decide to actually use Bitcoin as a payments system because it's not valued as much if it's going lower?
That's true. I think this pokes holes in a lot of the argument as Bitcoin as sort of the leader, the store of value, the unmovable, unshakable cryptocurrency. I think for a while, people really did approach it as more of a safe haven, saying, okay, this is really the safer bet. There's actually not as much upside. In the last 2 months, if you got into Bitcoin, it really wasn't moving in the way that sort of a more gambling focused trader might come in and say, okay, I really want to take the risk on a cryptocurrency. They didn't see Bitcoin as really that opportunity for upside. So you had people moving into, whether it was Dogecoin, you've had a lot of these smaller cryptocurrencies just soar because retail traders, it's so similar to what we saw in the ICO boom that they're really not looking for a store of value. They're looking to get in on momentum. They're looking to get in on memes and jokes on Reddit. And I've interviewed a lot of Dogecoin investors who say, yeah, we're doing this to get in on the joke. It's cheaper.
But that's the first phase, right, Kate? I mean, if you got into the markets, and we know that this big group of retail investors who like to pick individual stocks or asset classes, they got in about a year ago, right? Maybe this is sort of the maturation process, looking more at the long term. So Arjun, I wonder what you've seen in China, right? You said that retail investors were they could move the crypto markets a year ago, not the case anymore. So what's the sentiment there? Is it more of a sort of buy and hold, less of a casino type trade now?
Yeah, well, one of the things the Chinese government was really concerned about was, one, the volatility, and two, people actually treating this like gambling. Remember, gambling in all of China, apart from Macau, is illegal, right? So there's parts of that aspect that feeds into it as well. But that was why you saw the crackdown from the Chinese government. Now, people in China can hold cryptocurrencies. Just these trading venues have shut down, which has made it extremely difficult to move any of these crypto assets about. So that's what's happening at the moment. The other point here as well, of course, is China is developing its own digital currency. Now, it's not a cryptocurrency in any sense. It looks nothing like Bitcoin.
It's nothing
so
like it. They use it to track you, right? There's no anonymity. The PBOC will know everything you do.
Well, allegedly, I mean, that's one side of the argument.
I'm gonna get Arjun blacked out in China. I don't know.
I know. I do have to work, KD. You do know that. Look, that's one. Some of the allegations towards the PBOC's attempts to make a digital currency. The PBOC says, well, no, there will be a high level of anonymity in it. We won't be able to track you. But this is supposed to safeguard, anti-money laundering, all these kind of things as well. But for China, really, it's about making sure it's controlling its currency. Of course, they have strict capital controls here around the yuan as well. And so the digital yuan is all part of being able to control the money supply. And it's one step in China's sort of the digitization of its currency. Now, that doesn't necessarily mean that they're anti-Bitcoin in the long run. And this is an interesting point, because just recently I was moderating a panel at one of the forums here, and the deputy governor of the PBOC was on that panel, and I asked what their latest thinking was around Bitcoin and cryptocurrencies. And one of the things he said was that we see it as an investment alternative. Now, while they're continuing to take this hardline stance on Bitcoin, I don't think that necessarily means always in the long run that China may be anti-Bitcoin. And that's what we're going to see. It's hard to sort of always read the tea leaves when it comes to the central bank's thinking here, but it feels like they haven't completely shut the door. What they're just concerned about is, one, people speculating and gambling, and two, any financial stability risks as well.
I should say as well, Arjun, I lived in China for a number of years. There's so many the development of financial instruments has been a lot more, I guess maybe you could call it slower or more restricted perhaps in China. So when something like Bitcoin arrives on the scene, retail investors get very excited about it. Okay, I want to move on quickly though, guys, because we're going to have to wrap this up soon. Kate, it's not just Bitcoin that we're watching. We're watching the whole ecosystem, Coinbase, Binance. Man, what a time to go down for Coinbase.
Oh yeah.
So tell us what you know about that right now, and especially for people who are potentially watching and wanting to cash out but cannot right now.
Yeah. So we've seen Gemini, I would add to that list. We're seeing a lot of these crypto platforms struggle. And it's something we've seen before with the likes of Robinhood, but when you see the markets this active, so much volatility, we have seen a lot of outages, honestly. And they said right now that it's some desktop and mobile outages. It seems to be case by case, but a lot of people complaining on Twitter. And in the case of Robinhood, I mean, we don't know how widespread this outage is. That's resulted in class action lawsuits. So if people feel that they can't get their money out, or they can't place the trade that they want to place right now, especially when the price is, who knows what it's right now, 30 something.
35.
Yeah, exactly. That has resulted in a lot of bad press for Robinhood, a lot of bad the stock you see is down. I mean, it's basically trading in tandem with Bitcoin right now. But that is a huge headwind. And that is really how they build themselves at the IPO, is the safer alternative and the more regulated alternative. But this is a huge issue. If they're one upside and the way they differentiate is safety and reliability, if they cannot keep their system and their platform live right now, that's a huge issue. But Deirdre, I know we'll talk more about this on the
Yeah, we are. We're going to be, yes. And, I have so many more questions, and I'm sure our audience does as well, but we will be talking about this way more in 25 minutes. That's when Tech Check, the linear version, begins. Kate, you'll be joining us. Arjun, we're going to let you go on with your night in Guangzhou, China.
Yeah.
Go back on your pajamas, have a drink,
time for bed.
Watch the crypto markets. I know you will.
Hey, I'll be on there.
They never sleep.
Yeah, I'll be on there in the morning.
We have an appearance from the one and only T-Fan. Trung.
What's going on? What's happening?
I don't know how many people know this, but Trung and I are long time friends, and it's been my lifelong dream to get him on CNBC more. As one of the smartest people out there. Okay, Trung, give us your quick take, your meme take, because we're gonna have to wrap this up soon. What's going on in crypto today? How do you describe it?
I mean, it looks like follow through from what happened on May 12th, obviously when Elon discussed removing Bitcoin as an option for payment on Tesla. But I'm just looking at it, and I'm trying to keep positive. I'm trying to get that negative energy out of my life. So, I mean, if you look at it, Bitcoin's still up, 3x, 5x from the lows of 2020. And if you look at 2017, they actually had 2 drawdowns of 40% or more during that crazy run up. So I think this is just kind of par for the course, and the people that are really into it, the holders, they're just going to stay, right? And looking at these price movements.
Are they, Trung? Are they going to stay, the holders?
So I'll tell you something. I'll communicate something that was told to me. I haven't been able to verify this information. I had the opportunity to interview Stanley Druckenmiller last week, and he had said that one of the reasons that he was convinced to buy Bitcoin was he saw a stat basically that during the drawdown from 17,000 to 3,000 in Bitcoin, 86% of the wallets never sold. And he's like, okay, there's 86% of the wallets never sold from 17,000 to 3,000. That's pretty crazy. So if you're looking at a similar dynamic here, it's going to.
The only thing is that 86% of the wallets back then, as Kate's been telling us, there's a lot more institutional money in the markets now. We don't really know what they're going to do. But certainly, Trung, we got to watch out for your tweets today. I know you're going to have some good ones.
I got a banger just right now. You got to hit that.
Just right now? Okay, everyone go to Trung's Twitter page. Look at that. If only we could bring them up here somehow, but we will do this again for sure, guys, now that we've got Trung in the mix. We'll see you on Tech Check soon. And thank you guys. Thank you, the 3 of you, for joining. We'll see you again.
Thank you.
Okay.